Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering CenturyLink. I have some news to kind of go over. I've been buying the stock now since September. I believe that it's a strong company, and it's going through a tough time right now with a lot of sell-off. But in the long term, I do see this company turning back around and becoming back to the $20-$25 range. So I'm going to be covering some of the trades that I've bought or some of the trades that I've made here in the last day, in the last weeks, and then kind of go over some articles and some fundamentals for the company to kind of showcase that I do believe going forward CenturyLink does have a positive future. So let's go ahead, and we can see here for the day right now it's at $14.80. It is down for the month around 21% and down for the year around 40%. So you can see here just in the last 3 months alone, it's gone down quite a bit. It didn't start off here until around June 14th of 2017. So I purchased this back in September was my time frame that I began purchasing the stock because of upcoming changes that I saw and knew about coming to their company. So I began buying into them back in September, and they have fallen quite a bit since then. You see that they're down around 20%. Now inside of my Merrill Edge Market Pro, I can go ahead and show you some of the trades that I've made here, and I've continued to be making trades. You can see that my last trade here was 6 shares at $14.73. I am down a little bit in the position, let's see, where is it? $436 for the short term. But as long as I hold the stock, I don't actually lose any money. I don't lose any value. And right now I'm sitting at a 14.59% yield. Their ex-dividend is coming up this Friday. So I will be making a pretty nice penny just for holding their stock. And I do not believe they will be cutting their dividend. So here you can see these are the stocks currently held in my Roth IRA. Here are the current stocks held in my non-retirement account. So these were ones that I transferred from Robinhood, and you can see that these are purchased on September 6th to September 18th. And then inside my Roth IRA, I began to fund it and buy stocks from 10/26 until today, or the 20th of November. Now, going back and out of here now, let's go ahead and begin covering some of the information and news that I've been reading, and going forward why I believe CenturyLink is a great buy right now, and going forward how they will be changing this around. So this is just I'm going to go and cover just very quick details inside different articles because all of them kind of include different information. So this one kind of talks a little bit about how CenturyLink had a very high earnings per share growth of around 1.6% over the last 5 years. They did have a decline over year to year of 26.8%, and the analyst had a recommendation of 2.7 on this stock. A rating of 2 means buy, hold within the range of 3, and then sell within the range of 4. So this was at a 2.7, meaning that it was more of a buy and hold, which is currently a buy and hold right now, depending on who you're looking at. So let's see here, the stock has fallen from $27 at its 52-week high down to right now trading at $14.80. He does talk about how the company maintains the price to book ratio. It was at 0.63 and versus the industry average of 5.33. So here, if we look at the price to book ratios here, and I'm just going to go ahead and snip it to the last 6 months, we can see here that Verizon has a price to book ratio of 7.0, AT&T has a price to book ratio of 1.7, and CenturyLink here had a price to book ratio of 0.65. So I began buying this back when it was about on 0.65 price of the stock to book value, meaning that the price of the stock was actually under in comparison to its book value. Now I began picking this stock up and picking it up now because going forward you can see there was a big jump right here, and as you know they just picked up and merged with level 3. Now you're going to see that their free cash flow is down quite a bit for their 5-year. Let's take away these other ones and knock out their price to book. You can see that they had a huge chunk here as of 2000, it looks like 2016. They've gone down huge from the billions into the millions of free cash flow. Now this is something interesting I'm going to be talking about here in just a second. So this kind of covers this one. So again, this one kind of goes into a price to book of less than 1 indicates that the stock is undervalued, while a ratio of greater than 1 indicates that the stock is overvalued. So I do own positions in both CenturyLink, AT&T, and Verizon, because with net neutrality up on the line, I believe that it can go either way for me. Either they can continue going forward as they are and do well, or with net neutrality, they'll be able to generate new means of revenue. So that kind of covers the price to book portion there. Now this other article talks about how in the last quarter that just ended here, they did miss their earnings per share by 0.01, and they missed their revenue by 30 million. But this going forward, it's not going to matter. This is going to be changing here because of with the merger. So that's the only snippet I want to kind of cover there. I just want to cover quickly their earnings in their last quarter, which just ended. So this one kind of talks about whether it's signaling a dividend cut. And he talks about how they're down 40% this year. They pushed its yield up to 15%. You can see here that I'm sitting at a yield of 14.59. 14.59% yield. Next dividend date this Friday. I'm expected to get paid. I'm not sure if it tells me how much I'll be getting. Actually, I can do the quick math here. So if I bring up my calculator here and I get the dividend is 0.54 times the number of shares that I'm currently holding, which is I am holding, I believe it was 130 shares. So multiply this, so 0.54 times 130. So I'm eligible for a $70 dividend payment coming out in December. So I may be down around $400, but I will be getting about $70 back in dividends, which will get cut out of the price, but I'll be buying into more there. So let's dive back over here. So they're talking about how the dividend cut and some of the reasons why they believe a dividend cut may be coming in, signaling. So they're down, their yield's really high. That's an alarming high yield. That's very risky. It's a red flag. They talk about how there's a lot riding on this acquisition with level 3, and hopefully that the synergies between these two companies can avoid a dividend cut in 2018. Now, he does go on to kind of bring in the same graph that I was talking about where the yield greatly outweighs the price, which again is considered, in my opinion, like undervalued. But you also have to take a look at the fundamentals of the company, the free cash flow, and whether they can kind of maintain where they're at. And he kind of goes on to provide additional information such as graphs, and it's a long and drawn out sort of article. I'll go ahead and leave this in the description below if you guys want to take a look at it. Now today, CenturyLink won a spot on the 50 billion. It was General Services Administration. So here, General Services Administration, 10-year. So they essentially, GSA, the General Services Administration, they do basic functioning for the federal agencies. So they do supplies, supply products, communications for the U.S. government offices. So CenturyLink got a piece of this pie. So essentially, the federal government had $50 billion to go out there and find infrastructure for their communications, and they picked CenturyLink as one of them. AT&T is one of the other ones, but I'm invested in them both, and going forward, they're going to be getting a piece of this $50 billion that's out there. They also kind of talk a little bit about Snippet, how CenturyLink is the second largest U.S. communications provider. They also talk about how it's in more than 60 countries around the world, and how they focus on customer experience and strive to be the world's best networking company, and such and such. So they do talk a little bit about how by supplying cybersecurity, cloud managed hosting, and IT solutions over its carrier class network, CenturyLink provides government agencies with the security and reliability they need to carry out their important mission. So going forward, they already have a contract with the federal government for a piece of that pie, so that's going to be nice for them. AT&T, yeah, we already talked about that. AT&T is also in that pie. Now, the next snippet here is we're going to be using the price to sales ratio, and we're going to take a look at CenturyLink. Now here we can see that they had a price to sales ratio that's been right now going down here. They have a 0.48. Now This is an interesting read here. How can price of sales be used and useful? Now, let's consider how we evaluate a firm that has not made any money in the past year. Unless the firm is going out of business, which CenturyLink is not, it's located in more than 60 different countries, it's the backbone, it's currently got a contract with the federal agencies and providing the General Services Administration, and they're going to be getting a piece of that pie as well as their normal customers. So here, they're not going to go out of business. Now, the price of sales will show whether the firm's shares are valued at a discount against others in the sector. Say the company has a price to shares of 0.7, while its peers have a price or higher ratios of, say, 2. If the company can turn things around, its shares will enjoy substantial upside as the price of sales becomes more closely matched with its peers. That's the end right there. So, price of sales of 0.7 in comparison to the price of sales of 2. So does this company have room to turn around? This has the price of sales of 0.4, whereas AT&T and Verizon have price of sales ranging of 1.3 and 1.5. So going forward, CenturyLink is not going out of business. They have a very low price to sales ratio. Going forward, do I think they will turn around? Yes. So next snippet here, what's the next one here? They talk a little bit about how level 3 acquisition can it save the dividend. This one's actually very positive. It talks about some of the looks here, and they talk about the business overview. They have 5.9 million broadcast internet subscribers, 325,000 satellite subscribers, 4.9 landlines, 58 data centers, and then goes on to talk about different segments of their company and how they produce revenue for their company. Now, one of the areas here that I want to talk about is their business analysis. So here they have some dates of acquisition. So 2008, 2011, 2012, and 2016. So back in our fundamentals, we're going to bring CenturyLink up and bring in the free cash flow. And we're going to bump this up to 10 years. And we're going to take a look here at its price to book value as well. And we're going to see these spikes here of its price to book value. Let's actually take the price to book value out. So the first acquisition that took place was back in 2008. It was $11.6 billion purchase. Now, if we look back here at 2008, there was a drop off here in about 2008. Let's actually just use that 10 year. It wasn't very much. They had millions of capital. They were sitting here at $750 million. So that little chunk there of 11.6 billion didn't hurt their purchase too much there. So you can see that their free cash flow did go down quite a bit there, but they still were able to maintain it through the 2009, remainder 2008, 2009. They grew their free cash flow back up. And here in 2012, what took place again? There was a 2011 one, but 2.5 billion. So they went back up. Let's see, what was the date? 2011. So here, prior to 2012, there was a 2011 acquisition that took place right here. That was quite a bit of chunk of their free cash flow. So you can see that there was a chunk knocked out for the acquisition for Savis. Now, 2012, there was a 12.2 billion acquisition. So if you go back and look at 2012, their free cash flow did get knocked into a little bit again, but not too much. Again, they were able to generate free cash flow again going into their 2013. Their free cash flow kind of did go down a little bit, dip a little bit in 2014, 2016, but they were still in the billions of free cash flow. Now here in 2016, mid-year, I'm sure this is probably where they were kind of building up this whole thing with level 3 communications. They did a lot of the talk, the companies with the CEOs and such. I had actually heard about the merger prior to the whole announcement, and I knew kind of it was, what was expected going forward. So they did drop a lot of free cash flow here, but what took place in this last couple of years? So here, the 2016 $34 billion merger with level 3 communications. So these other ones were just like a quarter, it's not a quarter, like one third of what this complete merger was here. 12.6, 2.5, 12.2. Those weren't anything in comparison to that $34 billion merger that just took place, and that took down their free cash flow quite a bit. They did have to dive into there, but guess what they brought with it? They brought level 3. And level 3, their earnings per share and their revenue has been very well. And going forward, I thought that was really interesting there. Now this one talks about how level 3 will come in to the rescue. So just talk a little bit about how quarter 3 for CenturyLink wasn't great. We talked about that. They had their earnings per share miss. They missed their revenue by 30 million. They missed their earnings per share by 0.01. In comparison to last year's results, they talk a little bit about that. They talk about the decline quarter to quarter. And on the plus side, they talk about the free cash flow was 109 million after including a 100 million pension fund contribution and a 150 million higher spending cap on capex. And they just got a piece of the pie on the $50 billion contract. Now, how is level 3 going to come in and turn this around? Well, level 3 acquisition has reported its full quarter as a standalone company, producing $2 billion in revenue, an increase of 1.5%. There we go, I'm back. FCF is free cash flow. So let's see, where was I? I just clicked the stop button on my recorder. Let's see, 900 million in net operating loss carrying forward and such. The company also has about 900 million in net operating loss carrying forward and such. Is able to generate more free cash flow than it otherwise would if net income was subject to taxation. So it does go in. It talks about its free cash flow is 369 million, and the dividend is safe for now. So going forward, level 3 is bringing in a whole nother revenue of increase. $2 billion in revenue. They're bringing in some additional free cash flow. They're bringing in quite a bit of management, so their stock has done really well in the past in comparison to, say, CenturyLink. And it does talk a little about how the dividend is now fair for now. The CEO during the quarter talked about how the dividend is they don't want to cut it back. They know that shareholders, they really want that dividend, and it's important to them. So they did mention that during the quarter 3 reports here. Oh, here, it's actually quoted right here. So we realize that the dividend is an attractive part of the shareholders' return, and we are confident we can continue to pay the dividend while investing in growth in our network as we de-lever our balance sheet. So they are working going forward to continue that dividend because they know that shareholders know that shareholders want it, and they're going to still continue to try and de-level their balance sheet. So they did have some very nice points. So I'll be putting a lot of these articles in the description below, and let me know what your guys' opinion is of CenturyLink. Do you think they can turn it around? Based off all the information that I've been looking at, their free cash flow, why their free cash flow had left, looking at their income or their revenue, their net income for the past 5-10 years. Going forward, I don't think they'll have any hiccup. I think this is a very recession-resistant stock, and especially with the merger, they've been going through a couple different acquisitions and pickups. So this is one of their biggest mergers that they've ever, acquisition. This is the actual merger, so this is going to be generating some whole new stuff for them. So going forward, I do see CenturyLink turning around. So if you have any opinion on CenturyLink yourself, or if you've been researching and seeing anything else, go ahead and let me know in the comments below. Again, I want to thank everyone for watching up until this point. If you liked the video, hit the like button below. If you are brand new to my channel, please remember to subscribe for future financial videos. If you have any questions or want to say hello, please leave a comment below, and I will always respond back to you guys. So thank you for tuning in, and I will see you next time. Have a great